I used to believe investing was only for rich people. Every time I heard words like stocks, ETFs, or the stock market, I imagined people in expensive suits staring at giant computer screens, buying and selling millions of dollars every second. So I ignored investing. I thought, maybe one day when I'm rich. But one morning everything changed. I was drinking my coffee when I looked at my bank account. I had saved just 100, not 10,000. Not 1 million, just $100. I asked myself a simple question. Can this tiny amount actually grow into something meaningful? That single question started a journey that completely changed the way I think about money. Instead of spending the $100 on things I wouldn't even remember a month later, I decided to learn how investing really works. The first thing I discovered surprised me. Investing isn't about getting rich overnight. It's about giving your money a job. When you save money in a normal bank account, it usually grows very slowly. But when you invest wisely, your money has the chance to grow much faster over many years. Of course, investing also comes with risk. Prices go up, prices go down. That's completely normal. The biggest mistake beginners make is expecting instant profits. Real investing is a marathon, not a sprint. As I continued learning, I found something called an ETF. An ETF is like buying a basket instead of buying just one fruit. Instead of buying one company, you own small pieces of many companies at once. That means if one company performs badly, the others can help balance things out. For beginners, this makes investing much less stressful. Then I learned another important lesson. Never invest money you'll need next week or next month. Invest money you can leave alone for years. Time is one of the most powerful tools an investor has. Imagine planting a tree. You don't expect fruit the next morning. You water it. You protect it. You wait. Investing works the same way. Many successful investors don't become wealthy because they're lucky. They become wealthy because they're patient. Then I discovered something called compound growth. At first it sounds boring, but it's actually one of the most powerful ideas in finance. Your money earns return. Then those returns begin earning their own returns. Year after year, that growth can become surprisingly large. Amounts invested consistently often beat large amounts invested only once. That's why many people invest every month instead of waiting for the perfect time. Another mistake beginners make is trying to predict the market. They ask, should I invest today? What if prices fall tomorrow? The truth is, nobody knows exactly what the market will do next. Not YouTubers, not experts, not billionaires. Trying to perfectly time the market is incredibly difficult. Instead, many long-term investors simply invest regularly. When prices are high, they buy. When prices are low, they also buy. Over time, this reduces the pressure of trying to make the perfect decision. I also realized something else. Investing is as much about controlling emotions as understanding numbers. When markets fall, many people panic. They sell everything. Later, when prices recover, they regret their decision. Fear often causes bigger losses than the market itself. Successful investors usually stay calm. They focus on years, not days. As my confidence grew, I made myself a few simple rules. First, never invest money I cannot afford to leave untouched. Second, keep learning before making bigger investments. Third, avoid chasing get-rich-quick opportunities. If something promises guaranteed huge returns with no risk, it's probably too good to be true. The internet is full of people showing luxury, cars and expensive houses while claiming investing made them rich overnight. But real investing usually looks much more boring. Regular deposits, patience, discipline, consistency. Those habits don't go viral, but they build wealth. Months passed, then years. My portfolio didn't grow in a straight line. Some months were exciting. Others were disappointing. There were days when the market dropped sharply, but instead of quitting, I reminded myself why I started. I wasn't investing for next week. I was investing for my future. Eventually, I stopped checking my investments every day. I focused on improving my income, saving more, learning more, investing consistently. That's when I realized something important. The amount you invest matters, but your habit matters even more. A person who invests a little every month for many years often does better than someone who waits forever for the perfect moment. Looking back, I'm grateful I started with only $100 because that small investment taught me lessons worth far more than the money itself. It taught me patience, discipline, long-term thinking, and most importantly, it taught me that investing isn't about becoming rich tomorrow. It's about giving your future self more opportunities. So if you're a beginner wondering whether you should start, you don't need to know everything today. Start learning, start small, stay consistent, and let time do what it does best. Because years from now, you may not remember what you spent your first $100 on, but you will remember the day you decided to make your money start working for you.